Good morning, everybody. Last flow show of the week. Good morning, Stelios.
Hello, Kay. Hello, everybody. It's been a long week.
Today, Stel?
Huh?
How are you doing today?
I'm good. Just had all my aircon units did the annual maintenance, so all good. We're ready for the heat.
Oh, good.
All good. All good.
Yeah, we don't need anything like air cons here. We can't even spell it in the UK. You know, we never need one.
Yeah.
Friday. So as I said, last flow show of the week. We're taking just a couple of days off around Easter. That doesn't mean that tomorrow nothing's happening, but since most of the markets are closed, we are just taking a couple of days of rest. But this one will be a little packed, not really, I would say, not really anything shockingly market moving overnight, but a lot of geopolitical comments coming out again. And it's all happening. So China, Taiwan, Macron, von der Leyen are visiting China. The Taiwanese president is, of course, in the United States. She had a meeting with McCarthy. McCarthy a bit bellicose, saying that the democracy is threatened right now. Also saying that he wants to speed up arms deliveries to Taiwan. That, of course, was not of the liking for China, and they sent some ships into the Taiwanese Strait, crossing the median line. Also send an aircraft carrier into the Pacific for the first time in I don't know how long. And then in the meantime, Macron was visiting President Xi in China, and he's actually trying to be a little bit more mellow and reconciliant, and trying to put some balm on the wounds right now. And he said they must resist reducing economic and diplomatic ties with China. Xi replied to that, saying that China and France are maintaining close communication, collaboration on climate and other differences, and saying that Macron's visit to China is injecting a new impetus in the China-EU ties. So a lot of comments here and there across the Atlantic and the Pacific. In the meantime, Zelensky as well, it's all a bit, I wouldn't say the same basket, but still, I mean, a lot of it is tied to each other, saying that he wants to talk with Russia on Crimea, but not before the offensive is over. So the geopolitical headlines overnight are pretty similar to what we've had of late. It's keeping the world on its toes, as well as the financial markets, and we're seeing some moves in some currencies, I think, that could be somewhere tied to what's been going on there. Well, I'll have a look at them a bit later. Yeah, and then we have little fat boy in North Korea adding his bag of comments, saying that one of the lines was that the US and South Korean drills, joint drills, are pushing the tensions to the brink of a nuclear war. So that's just to another rotten cherry on another stinky pie. But then let's move on to some more lighter headlines. For those who are watching the India movements, also the RBI kept its rates unchanged, where 3/4 of the analysts were thinking that they would raise 25 BPs to 6.75%. They kept it still at 6.5%. So for those watching Indian rupee, it weakened a little bit, obviously on the back of them holding their hands still. Elsewhere, some Yeah, no, it's the rest is more like a bit of articles, a bit of expectations of what may happen. And in Japan, Kishida and Ueda. So we have the handover between Kuroda and Ueda this weekend, and Kishida and Ueda are planning a meeting on the 10th of April. So that's next week. And Kyoto News found it interesting to add that they think that the first meeting will not grant much, that Ueda may keep the current monetary policy as is for a little while, and looking what they could do in a latter stage. So that made the dollar yen jump just a little bit, but we are already back to levels before those lines hit the wires. Then in the US, and that's just an in between, which made me a little bit chuckle as well, because if people think that they have issues to handle a situation, they just pass it over to BlackRock as usual. And so BlackRock becomes the advisor on selling the 140 billion in securities after the government takeovers of SVB and the Signature Bank. So whenever you don't know what to do with big money, just give it over to BlackRock, right? Still.
Well, it seems to be the solution.
Yeah, they're handling virtually the whole world's important money right now.
Yeah. Yes.
What else have I read? Yeah, the RBA financial system stress test came out saying that they are resilient. The whole system is resilient, but there are pockets of stress in construction and the commercial lending side. So the Aussie is still pretty much on the defensive. We had a little bit of a small revival there, but we're still hanging around relatively weak levels compared to what we've seen earlier in the week. Yeah, just a while ago we had the Bank of England data out for the monthly data, their expectations, and they expect inflation to come off, but really slightly in the upcoming months. They expect it to move by 0.1% or so. So it's still very slow. As Telio's already said a number of times, inflation should, in theory, continue to come off, but then we've seen the oil spike again this week on the OPEC plus. But it's all very slow, right? Still.
Exactly, and we have to remind ourselves, even if inflation goes back down, let's say year-on-year CPI goes to 2% in the US, that is not victory. That just means that the high prices are here to stay. You know, it's theoretically we need to see deflation to bring prices back to where they were before, or towards those levels, but I doubt we're going to see that. But as I've said so many times before, just the mathematical calculation of the year-on-year CPI means that eventually we're going to get back to lower levels, unless obviously the world goes upside down. So, you know, the question is, how does the Fed and every central bank interpret the inflation rate? You know, if we go back down to target, is that job done? Theoretically, no, but I'm guessing they're going to say, yeah, everything's good. You know, we don't need to tighten anymore. We don't need to do anything more. Everything's back to normal.
Yeah, absolutely. Okay, I think for the main headlines,
I see Ryan, by the way. Is he here?
You do.
Oh.
You do.
Oh,
can you hear me?
Yeah.
You're supposed to be on holiday, mate.
I am. I'm on the sunbed as I speak to you guys.
Go away.
Are you wearing your Easter Bunny onesie?
No, I'm wearing my not his hanky. It must be best. I thought I'd pop in, wish everyone a happy Easter, and see make sure you haven't broken anything while I've been away.
For the time being, it's still working, as you can see, but no guarantees. Once we cut later on today.
Everyone doing all right? Making lots of pips, trading going all right?
Yeah, it's all right, mate. It's all right, mate.
Yeah.
I still see a few central banks are throwing in a few bombshells. Was it the RBNZ went a 50 the other day?
Yep.
Yeah. But then the effect was quite short-lived.
Yeah, I'm sure.
Yeah,
I'm sure.
yeah. It's they are a bit of a strange lot there. Or was thinking of stopping at the end of the year, and now he's back all guns blazing and being one of the most hawkish central banks again. So it's a bit difficult read of what's happening over there.
Yeah, definitely. Well,
All right,
I'll let you
Ryan.
carry on, mate. Yeah, I'll let you carry on.
Yeah, no problem at all. We are just about to move over to the data that we had. So yesterday we had those PMIs coming out, the services PMIs coming out, a bit of a mixed bag, as we already mentioned, in Europe. And then the States came out afterwards. Revisions in the services PMI came out weaker than expected, and also the ISM came out weaker than expected. And we have to note that especially the employment index, the prices also came off quite a bit, and even new orders lost 10 points. Now we're still above 50, so still no big disaster, but we have to note that those numbers are coming up sharply, and that's in line with what we have seen this week on the US data. They have the tendency to start to slow down. We also saw the ADP coming out a little bit weaker than the expectations. We know the ADP is always a bit of a lottery. Well, any of those employment data are a lottery these days. But the ADP in particular is a bit of a lottery. So we had just a minor setback on the dollar when that came out, but then the rest of the day was really marked by the fact that I think the market running a bit short dollars, unable to break fresh highs. We've seen this euro unable to get above this 109 3/4. We saw the cable struggling with the 125 level, and then especially antipodians, oil currencies as well, giving back quite a bit of their game. So it seems the market was waiting for those data to just press a few buttons and cover their dollar shorts into what is going to be a very uncertain end of the week. Yeah, oil data coming. Were you going to say something, Stelios, or?
No, I'm muted.
Oh, okay. I thought I heard something. All right, no problem. Yeah, the oil data came out, a draw again, just as API showed, but there as well. Let's see, where is the oil trading right now? It's still trading around $80, so not a lot of move in that. Overnight, we saw again some Japanese bond selling in the past week. That came after a couple of weeks of buying. These are numbers that we have to monitor very closely now. This fiscal year starts the new fiscal year starts in Japan, because there's a lot of thoughts and articles out saying that Japan Inc. or Japan, the lifers, the asset managers, could start to sell a lot of foreign bonds again, a bit like they did at the end of 2022. So those numbers should be monitored. For the rest, we saw the those are minor data. Trade balance in Aussie land okay on the face, but not so okay on what the activity components are. Both exports and imports went down, so that is not very good for the business activity. Still February numbers. Moving on. Swissy, we've got the unemployment out, a bit better than the last one, stable on the seasonally adjusted. Swiss franc has been a beneficiary of the latest, call it risk-off moves, together with the yen especially, and the Swiss is trading at pretty strong levels as well. Also helped by what I said earlier this week, Schläger coming out saying that they may still hike rates. That's one thing, but especially they may still continue to sell foreign currencies. to combat inflation. So that's one of the reasons why Swiss franc is keeping its beat right now. Sterling wise, we saw the Halifax house pricing ticking up. That helped the cable and the sterling a little bit this morning, but considering everything else, the moves today are expected to be subdued. Swedish IP a little bit better than expected, but the Stocky is not moving that much. Second one in a row where we saw the German IP this time beating expectations, also a little bit better on the revision. And that is what we also saw. When was it? Yes, was it yesterday or the day before?
Very volatile number, though.
The factory orders.
Yep.
Were also better than expected. So it looks as if Germany may, a bit like the rest, escape the worst recession fears there. Those numbers, of course, they can, as I said, still February numbers. So we will have to wait as the year moves on how it goes. But we can't look beside these numbers. These numbers are improving. Where we feared that 2023 could start on a bad note, it's actually a better. Those numbers are actually better. So we have to keep that in mind. Construction PMIs out globally across the board, weaker numbers than expected. But again, if it's weak everywhere, that's ball back in the middle, 1-1, and we start all over again. So they look to be a bit weaker across the board. Also seen in elsewhere, those construction numbers are weaker in March. Sterling also in the UK also weaker, but we're hanging above 50. So that's still an expansionary number. Right. What's next? Today we have the next set of jobs data coming out. We've seen the first couple of ones have been slower, especially the YOLTS, and then yesterday the ADP. Now we have the next set. Challenger job cuts this afternoon. Hasn't been a mover in the past. The claims as well coming out, still expected to hang around that 200K number. Hasn't really been a mover, but in the light of everything that happens in the jobs market this week, it could be stupid enough to see a move today, especially that the markets are going to be mostly closed tomorrow. If we get any surprise, any side may spur some more managing of the books in the market participants' minds, especially that tomorroor we're going to have that NFP coming out on Good Friday. People should be or could be pushed to manage their books more. Interesting one, and for once the Canadians have been a bit more clever than the US, is that we get the Canadian unemployment data today. So this could be the focus of the rest of the day or the US session. So expect the Canadian dollar to move quite a bit. One interesting point, we usually don't comment too much on option expiries, but today there are $2 billion Canadian rolling off at 134.55. So it could act as a little bit of a magnet into 10 a.m. New York time. So keep that in mind. If we're turning around there, it may be that the move starts afterwards. If it's big enough to magnet option interests, when there's not a lot else to do, those option expiries could be deciding on the short term moves anyway. There's not too much to mention sizable in other currencies, so that only for the options. IV PMI coming out, usually not a mover at all, and then tomorrow we are going to have a decent slew of Japanese data. Japan is open, by the way, tomorrow. China. Is China open tomorrow? I think China may be open tomorrow as well. Yeah, so the Asian market will relatively I'm just looking across if Singapore is on holiday, so that's less liquidity. Hong Kong is also on holiday. So yeah, there's mainly going to be Japan and China in the market in Asia tomorrow. So at least the liquidity will be sort of there, but at least it will be already reduced. And then we have that famous NFP coming out tomorrow. Nobody knows why they kept it on a day like tomorrow, but anyway, they decided to keep it. So that's going to be the absolute lottery tomorrow. Again, we've been warning already. Manage your positions. I'm not even sure that we as retail traders are going to have any decent prices at all tomorrow, because in an empty market, our liquidity providers will for sure take the safe side and
screw us.
Screw us.
That's what you were going to say, isn't it?
Yeah, make it much wider. And that's why I'm saying today I'm just building off positions and avoid any dollar outstandings, barring my very long-term silver, but that's a different, completely different game. But I will not have anything in the majors in dollars, because tomorrow is a lottery and I don't even know whether I'm going to be able to cover a position at all. So that for the warning. Stelios, what are you looking at? What is catching your eye?
Yes,
in the markets. I
can
think we can.
Yeah, go on.
Yeah, I think we can move over. You told us yesterday you were going to.
I'm going to take the screen. Yes, you show a few charts.
I'm going to stop sharing now and give the handover to you, and then I'll take it back after that.
It's worth mentioning Goldman is warning of a surge in jobless claims today, and that's kind of taking the screen.
Yeah, okay, I stopped sharing. Go ahead.
It's in line with the numbers, the JOLTS, and yesterday's numbers. So we could see jobless claims rising today, and obviously payrolls on Friday. We are sitting precariously at support in yields in the 10-year US. I mean, we are at the lows as we speak, 328, 329. That's, I mean, we are there. So if this breaks, this will probably mean that jobs numbers tomorrow are bad, and so they come in lower than expected. If that breaks, then really I see clean air until, I don't know, until the big 3%, the figure level, but really support, kind of long-term support area for 10 US is somewhere between 2.5 and 2 3/4. So we have a long way to go if this breaks. It's a difficult situation if jobs disappoint, because the market's already pricing quite a bit in terms of cuts, 3 25 base point cuts by January, if I'm not mistaken. So there's, it's difficult to see the market pricing a lot more in the short term, in the short end. Obviously, further out, anything can happen. But we have to be aware that yields are on the precipice, and they are about to, I think, take a lot of stops below. So I think this is very, very dangerous. We have to be aware of that. So if yields break down, what happens with risk? Well, theory says that risk should be bid because, yields down means that the situation is bad, which means that the Fed's going to be pausing and cutting and doing everything that the market wants it to do. It's not as clear as that, in my opinion, because one of the reasons why all this might happen with yields is because the economy is actually not doing that great, and employment is dropping, and while prices are rising, disposable income is dropping. This is all a vicious circle, which inevitably ends to lower economic activity. I mean, this is economics 101. So theoretically, bad data and bad employment data should not be good for stocks. However, yeah, we do know that the instant reaction of the market is to buy everything when things look really bad. So
yeah, but we've already seen a little example of it this week, right?
Yeah.
when the economic data turned south, the yields came off, and the stock market found its top in around at 41.30 on the S&P, and then we came off down to 40.70. I think that's a bit of an example of what's to happen in these markets if really economic data turns south. And as we have already been mentioning a lot of times, employment being one of the last big standing dominoes, if that starts to falter, I'm personally not going to buy any indices. I'd rather be looking at the other side.
I agree. I think we should be selling rallies. The S&P did drop a little bit after the disappointing numbers. I do think there is a chance of another little push towards 4,200, simply because the crowd, I think, is short, and in the short term at least, I think the path of least resistance might be to the upside, but I really think we should be selling rallies. That's my bias. And if you're a ForexAnalytix subscriber, you can go to the platform, look at the macro component, and you'll see a nice red light, which means I'm bearish. So I think sell the rally mode in stocks. Now, the dollar, it's also a tough one. I mean, theoretically, the dollar should be weakening as the economy is faltering, but the only problem is that if we do see risk off usually means dollar bid. So there is a little bit of a counter action to what theoretically should happen with the dollar, which means it should be going lower. So I think we do have, I'm going to repeat what I said a few days ago. Gun to my head, I think the euro dollar is going to 110, is going to test 110, and then from then, obviously, who knows how things are, and how markets are trading. But I think on a weak number, we will spike towards 110, which is very, very big. It's a nice big number, a big round number. Markets like those, it's also a fib or close to that, and it's these highs. So there's going to be a lot of resistance here. So the dollar, I think, eventually is going to be falling, but on a risk off and on a severe risk of move, the dollar always gets a little bit bid, so that might cushion the fall of the dollar in case it starts dropping. Oil is a tricky one. I had been saying for a while this breakdown here was really nice. I was waiting for a retest. It came actually during late New York hours when I wasn't trading. I was probably having dinner or something, and so I didn't sell it. And then the next day, remember, it was the production cut, and we're up here. Funnily enough, we have stopped exactly at this resistance trend line. I think we're probably capped between 81.50 and I don't know, 75.50. I know it's a big range, but I think that's going to be the new range until we get more data, more information, more things happening in the world. But supply is still tight. It was tight already. It's tighter now. On the other hand, the potential of a global slowdown should be bringing downward pressure to oil. I mean, it's always the case. So I think for this reason, we're going to be probably trending sideways within this range until we get resolved one way or another. I think a break above these highs, 81.50, excuse me, it's going to be a big technical event. And I'm going to try and run it to the upside in the short term as a quick punt. I rarely do those, but I think this one I'm going to try. Metals are doing very well, consolidating a little bit yesterday. Doji and the gold, a similar story in the silver, and let's face it, we are very, very close to the all-time highs in gold. This is a very important zone of resistance, and we're now really close to it. I mean, 2040 to the highs, which is 2070 something. That's the area where, if you want to play short, that's the place to short it. But look out, if that breaks, all bets are off. I am still bullish gold, silver, even platinum, but I think now getting for gold is specifically, if we get to that level, I think it's probably going to be time for a little retracement. Silver, I am bullish. You know me. I still have half the position long from 2150. I bought some more a couple of days ago on the breakout. Roughly these levels, probably a couple of cents below. Look at this. I mean, this is just no pullback. Huge, massive 4.5% day, whatever that was. And then we still have a couple of very shallow daily trading ranges. And it looks like silver is waiting and preparing to launch a little bit higher. And this is a clear breakout for me, contrary to gold, which hasn't broken out. Silver has. And if you look at the gold-silver ratio, we've broken the 61.8 retracement. So really, theoretically, we should be heading towards the high 78s, which is the next fib. And so that means if this ratio falls further, that usually means metals going higher, silver outperforming gold. So my position is unchanged with silver. I'm still keeping this, and I'm quite bullish. My stop is for that second position is 24.55, which means that we are going to be negating the breakout of those highs, keeping it nice and tight and controlled, because you never know, tomorrow's action or tomorrow's data might bring a very volatile day on Monday. So be careful with what you're carrying over the weekend. Cryptos off the highs, but you know, grand scheme of things, this is just it looks to me like some kind of a, oops, let me take out the magnet. I hate the magnet. You know, something like, oops, come on. Something like that. We're consolidating. I think we're going to break one way or the other tomorrow. Cryptos are open tomorrow, remember? So they're going to be trading all day long. So that's probably your best risk proxy if you want to be trading something anywhere near liquid. And Ethereum is also a little bit off the highs, but Ethereum is now entering a pretty big resistance zone. So, you know, we need to see risk on for cryptos to break out. Bitcoin obviously a lot closer to breaking out than Ethereum. What else can we look at? The Euro pound. We've been talking about this for a while. I did say, you know, I had an overall target of 90 for a while. We almost got there. After that, in the kind of low 89s, I said, that's it. My bias no longer bullish. I'm back to neutral because I think we're going to be grinding slowly lower. And this is what we're seeing. We are getting very close to test important lows. I mean, this 87.20 odd, 87.18, 87.20 is big. This could be tested, you know, today or Monday. And if that breaks, then we're heading towards a 200 DMA, which is just below. And below that, really, it's going to be 85.5s. So I still think my bias still for this is to be selling rallies, but we're now in no man's land. So I'm not going to be this. I'm nowhere near levels where I want to be selling. Probably 88.20, 88.30. I'm going to look at, but we're nowhere near that at the moment. The other one which I really want to sell is Euro Norway, but excuse me, it's you know, it's perilously close to these highs. And look, I mean, we are at, I think this was that was the high. The COVID high was the high. That was an incredible move. If you take that out, we are basically at all-time highs, which is scary because I really like the krona as a currency. Obviously, the problem with the krona is that the central bank keeps selling it every day. And why not? You know, if the world wants your currency, might as well sell it, you know, buy dollars and then use those dollars to buy stocks, which is what the Norwegian Sovereign Wealth Fund is doing. And the SNB as well. So you see currencies which are theoretically safe haven currencies. Obviously, the Norway a lot less than the Swissy, but you know, they take advantage of the demand that that comes for the currency and just keep selling the crap out of it. The yen, I really don't know much about the yen. I mean, the line that I'm looking at is 127.5, but that's a million miles from here. I'm gonna on a break below. I'm
Could
gonna
be there
try
tomorrow.
that. Yeah, well, that's a big move. That's gonna be a very big move.
I'll have a look at the yen.
Okay.
In a minute.
Yeah, that's pretty much it. I mean, I don't have anything else major to say. The DAX is also near resistance. I mean, if you look at the S&P and the DAX, let's go to a daily. It's a very similar story. The S&P is close to recent highs, and the DAX is the same. If you look at the highs from 2021, obviously we have the short-term highs here. The DAX has been trading a lot better than the S&P, but yeah, again, DAX as well. I want to be selling rallies, but I'm not as confident with the DAX as I am with the S&P. So I really hope we see 4,200. I really do. That's one I'm gonna like to get ahead of. Yeah, by the way, if we do see 4,200, I think they're probably gonna gun for the stops above. So if we get to 4,200, I'm not going to sell it straight away. I'm going to wait and see if the stops get triggered, and then I'm going to have a go. But these indices, they're a little bit scary. Anyway, that's what I have.
Alrighty.
And we wait for the big numbers tomorrow.
Yeah, thanks, Till. I'll have a look at a few things before we round up for the day. And the first one I'll be looking at here is this dollar yen. So this is the daily chart with the Ishimoku cloud, which today and also tomorrow, the bottom of it comes in around 132.15, and the top side, and I've been banging on about this 133.80 figure for a while, the top side is around 134. And we'll still hang around there tomorrow as well. So if the top side is what it is, if we get a surprise tomorrow on the NFP, or I've also seen now the headline that Goldman warns about the surge in the claims this week. So the surprise trade will be for a better number, clearly, and tomorrow as well. Clearly, the surprise trade will be a better number, because we have seen those first numbers in this week coming in a little bit weaker. So the surprise rate will be a better number. So watch, first of all, 132.20-ish, which was already a support on the way down without the cloud, but that's the bottom of the cloud, and then 134 the top of the cloud. 134 goes, I think then we are back to higher levels. But then what's happening on the downside? I think yesterday's low and those prior lows here around 130.40 are already important enough, and they will that's probably the gateway to a break of 130 if the reports come in crappy. And then we are talking indeed, and I'm going to take out the cloud, so for clarity, then we are talking indeed about the prior lows again. This trend line comes in around 127, will come in around 128 tomorrow, and 127.30. So this zone here, this prior zone, is going to be very, very important for future developments in the yen. And don't forget that we have not only the NFPs coming out, or the jobless report. Also keep an eye on the wages. But I think for tomorrow, in such an empty market, I think the headline number will take center stage for this one, and the rest of the indicators will be looked upon in a second instance, I think. So that this is the big number. If we would go below, then a lot of people are looking at 125 being a target, a real target of this move lower in dollar yen. But do keep an eye on those the 50% of what of those big moves higher. Either you take the 2020 low, or you take the low when after the the second low here, and then when the Fed started to reverse course. So this I'd rather look at this one, to be perfectly honest, because 2020 was a bit of a blind darts low, right? So 127.30. If you want to look at the other one, it's 126.60, and that's going to be the big zone to the downside on the dollar yen for me. Right, then people are looking at cable. Cable has been, sterling as a whole has been on a bit of a tear. If you look at the start of March, cable was trading 118, and at the start of April, cable is trading 125. And I've been saying for a while that I thought sterling was looking quite a bit better. Signs that sterling, the UK could escape recession. And despite whatever Bailey may try to kill the pound, it has risen, which is an incredible surprise for us traders in the market for a little while longer, because Bailey usually rhymes with a sell-off in the sterling, but this time even he fails to put it lower. So we first of all have to respect those breaks here. Yesterday, I think it was like a managing of positions. We've seen the dollar pick up steam after the data. It looks as if some decent accounts were a bit tired of selling dollars and started to manage their accounts ahead of what's to come on the data, on the jobs data. So that's why we saw this move, and I think the same thing happened on the euro. The move back down to 109. There must have been weak longs begging to get stopped out, as we say, and that's what happened. The sterling as well, back through 124.40, but it really held very, very well. We haven't made it even below the 38.2 of the latest little surge, which is around 124.30, and that was the one that I was watching as well with some small positions. All in all, I am still mildly positive towards the sterling right now. For what the cable is concerned, of course, we have to take into account the other side of the pair as well, which is the dollar, the uncertainty about tomorrow's numbers. And that's why I don't have a position right now in it, because we can wake up on Monday morning and be a big figure away from where we are. And if it's a surprise in the NFPs, the big figure could be on the wrong side of people who are trying to play short dollars. So I'm just taking the more conservative route here, and won't be having any dollar positions into tomorrow. But anyway, if in turn the numbers would confirm what we've seen earlier this week, I've been already talking about this. This could be a couple of intermediate stations between 126 and 126.5 on the cable. But I'm more interested in what's happening around here, which is the one, and that's all the way up in the 127.70s. I don't know if I'll be able to trade tomorrow at all, but if it's a weak number coming out on the NFPs, I'll try at least to get back long into cable for a move up to high 127s. That's still my kind of base case right now. So that for the cable. Still already talked about the euro sterling. I have a slightly different level. I know we've seen those lows here holding in the low 87s, and we have to, of course, respect it. But as people who are watching this show and people in the room already know, my make or break zone is still just below 87. We could argue that the channel here can take us lower. It's around 86.60 or so right now. But if I look at those traffic zones and what we've seen in the past as well, this to me is a bit of make or break, hold or break zone. This 86, 85 figure is still, for me, very important. But we all can look at different stuff in the same and still be right or collectively wrong, as we've seen. Right, we have to have a look at what's happening on those yen crosses, because especially the antipodians versus yen have been hammered over the past sessions. Double whammy RBA worse US numbers have put a serious stop in this Aussie Kiwi. People know in the room we have been short. Today though, yesterday we came. We stranded on the 61.8. Again, same thing. Since it's a risk pair, I've decided to take the profits on this one right now and see what happens tomorrow after the NFP, because the NFP will be a dollar event, but we know that whatever happens now on the real economic data, it will have an impact on risk. And so I'm preferring the safe side on this one. As we say, we can taking profits. Nobody ever got worse of taking profits. So this is what I did. And then we'll reassess once the number comes out tomorrow, because a good number in turn will likely see dollar yen spike a little faster than Aussie would collapse. That's kind of the risk factor and the risk side of those pairs. If risk is trading better, yen pairs tend to go higher. Haven't given up on the short side, because I really think we have put a serious stop in play there. And but we could, why not, get back up to this more the middle end of the range, around 860 or back even 89 before continuing the way down. So better be safe than sorry, I always say. Yeah, Annie's asking about sterling yen. I can have a quick look at that as well. Yes, it's been rejected, like all the yen crosses. It did a false break above the prior high, significant enough, of course. This was a bit of a runaway move that we saw here, and then exhaustion failed, and then we collapsed together with the other yen pairs. But have a look at what happens here in those low 163s. I've been highlighting this level already. We had came to rest on it before we did the last jump. It's always been a bit of a traffic zone, right? Yesterday, and I think that's similar as with most of what we have seen in the rest happening. This euro dollar stop run below 109. The rest of the currencies losing steam, and the yen picking up steam on the risk front. Similar here, we did a bit of a stop run below, but we're already trading well above, 0.5% above again. So keep an eye on what's happening. I'd say close the week, but again, tomorrow is going to be such a strange day. Rather have a look at it, how we trade this start of next week, and I would say I'm also going to keep an eye on that one. And then we'll have to take into account again those Kishida Ueda meetings, right? So keep an eye on that one. And speaking about those yen crosses, where is it? Euro yen is a bit the same as a sterling yen, right? This 142 3/4, 143 zone is a bit of a, seems like a bit of an obliged passage in whatever happens, whatever is decided with this pair. It's similar level. We did the same thing as on the sterling yen, broken a little bit above, tried several attempts to break through the triangle, but then the yen strength especially has put it all the way back down again. But again, and I would say, let's look what happens on this one on Monday, when the markets will slowly reopen again. But even Monday, there will still be a lot of markets closed for Easter Monday. But start of the week, let's see where we are. I think this could be decisive. If we start to really move below and hold, then I wouldn't rule out a move back down closer to 140. If we hold again, then why not? And see a retest of those prior levels. And then this Noki that Stelios was talking about, I showed it yesterday as well. This Euro Noki really held very, 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 very well. The upward channel, also the FIB support, and this 1120 now is becoming extremely important, extremely important. Even if we get back down, because it's a pretty steep channel, right? Even if we get back down at some stage below the bottom end of the channel, we may see a bit of a stop run, but then we will still have to very carefully watch what's going on there. And Stelios was already mentioning the longer term as well. We are mainly not that far. Okay, it's another 3%, but we are not that far of the second spike high that we had in April 2020. So if ever this breaks above the prior highs, I think the market may be gunning for what's happening around here. And in the 1170s are important enough to keep an eye on, to keep a close eye on them. And then, as I said, the underside is 1120. If we start to break back below 1120, next stop is probably going to be 11. And then we are looking at the secondary support, which is just around 11 right now, slowly moving up. But I think 11 will be psychologically big enough. If we start to go back below 11, then it's probably the end of the party for Euro Noki. So we do have big levels, not that far away. It's a risk currency. It's also driven by what the Norges Bank is doing and what oil and gas are doing. So that for the Norwegian kroner. The last one I want to keep an eye on. I'm a bit puzzled to what's going on in the China sphere. There's been an article out saying that a lot of short positions in Chinese yuan have been scaled back. But then why is it not trading lower when people are buying back short CNH? It's I think a lot has to do with the geopolitical situation, of course. But hanging around here, I don't think it's going to be last. I don't think it's going to last for long. So this is one I'm going to keep very close on my radar for what's going to happen in the next coming weeks. MEX, as we've said, and also what Gregor was hinting at earlier this week, and I've also been highlighting this level. Take a look at what's happening around 1135.45. That's exactly what we did yesterday. We came back to 1840, and now we are trying to respect this trend line again and start to move a little bit lower. I'm not going to get involved before the end of the week once more, but starting next week, depending on risk, this can put another leg higher, and then I think we may have a chance to get back into higher 18s, or risk is doing pretty well. And paradoxically, a good number tomorrow on the NFP will likely put upward pressure on the Mexican peso, because MEX being being a manufacturer for the United States, they want a good US number on a good US number tomorrow. So that one on the radar for next week. And then the last one, for those who watch emerging markets, the SARB 50 BPs hike has completely been undone and reversed. And I think that has to do, we know about the South African worries, right? But it also has to do with geopolitics somewhere. We were watching this 18 level, broke through yesterday, and we're already trading back above 1820. I missed it, but sometimes it's better to miss a move, but still understand what is going on. So this one now is going to be much more tradable again, I think, if we get back to around 18. And I think I'm going to leave it there unless anyone else has something specific to look at.
Thank you, Kay. That's been excellent, as always.
Waiting just 30 seconds to see if anyone has something specific to look at. This one, keep a close eye on for what's going to happen on the euro dollar. This is your move into the 109s. We're stalling now. That's the short differentials. That's going to be important to open the next week again. Either we are failing here and the dollar interest rate goes back higher, and then it's likely going to weigh on this one and weigh a little bit on the euro dollar. If in turn we get bad numbers yesterday, I expect this to shoot higher. And that's really it for me. Thank you all very, very much. Wishing everybody a very, very happy Easter. Go and chase those bunny. I hope you find a lot of eggs. Stay safe. Don't try to be a hero in those markets. The markets will still be there next week. Stelios, thanks a lot for being with us. I see Ryan is still there as well. Enjoy your holidays, Ryan. I hope you enjoy the cervezas and the nice weather out there.
I surely am. I surely am. I'll bring you one back.
All right, lovely, mate. Thank you.
Thank you, Cayman. Thanks for being here this week.
Yeah,
And
thanks
thank you.
everybody
Cheers,
again
guys.
for being with us all the time, and we see or talk to each other next week. Adios.
Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.